You might remember earlier this year when I broke down the brand new no tax on tips law, and I told you point blank that no, your tips are not magically tax-free. What you actually get is a deduction up to $25,000 with a bunch of rules and income limits. Well, the IRS recently released official guidance, and wow, it changes a lot. Some of it makes life easier. Some of it makes life more complicated. That's the IRS. And some of it nobody is even talking about, even though it affects millions of workers and small business. So today, I'm going to break down exactly what the IRS is saying, what it means for you really, and what employers now have to do, and how you can avoid losing out on your deduction. As I said, we went over this earlier this summer, but let's go through a quick refresher to make sure we're on the same page. Number one, very important, not tax-free income. You still pay Social Security and Medicare taxes on every dollar of tips. This is a big misunderstanding. Number two, you get an above-the-line deduction. This is big, up to $25,000 of qualified tips, meaning it reduces your taxable income even if you take the standard deduction. Number three, you must work in a qualifying tipped occupation. The IRS has published a list, and if your job isn't on that list, your tips probably don't qualify. Number four, high earners get phased out with an adjusted gross income of $150,000 single, $300,000 married. And above that, your deduction is going to be reduced. And number five, huge misunderstanding out there. You must properly report tips. If you don't report your tips, you can't deduct them. I can't say that strongly enough. Now, that's the baseline. And now the IRS just clarified exactly how all of this works for 2025, including some big curveballs. Now, with this big IRS update, there's a few things that are different. Number one, W-2s are not being updated for 2025. I wondered how they were going to do that. This is huge. They said we're not going to deal with this year. The law says employers must separately report your cash tips and your occupation on your W-2, but the IRS just announced they won't require that until 26. So for 25, your W-2 won't change. And it also is not going to list your qualified tip amount, your job code, your occupation, a separate breakdown of cash tips. And this creates both a benefit and a problem. The benefit, of course, thankfully, we can still take the deduction using fallback methods, and I'm going to explain those in a minute. The problem, the IRS basically said as an employee, you're on your own to figure this out, and a self-employed person for that matter. You have to figure out whether your tips qualify, and employers, they don't have to provide the information yet. Now stay with me. There's a lot more to cover out of this new guidance, but if you are finding it helpful, please go ahead and hit the like button and subscribe. You're going to want to hear all this, and you're going to want to get all the updates as they come out. Now, the IRS gives workers 3 ways to calculate their 2025 qualified tips. Since W-2s aren't updated yet, the IRS is going to give us those 3 options. Number 1, use box 7. We're used to that. That's at Social Security tips. But that's all that's reported. That may not include everything. But whatever's in that box 7, the IRS says we can rely on that. Option 2, we can use our monthly Form 4070s that we turn into our employer, and that's the monthly tip report we give them, and we can use that. The IRS said that's fine. Number 3, use box 14 if your employer voluntarily reports tips there. However, don't plan on it. Some employers will, most won't. And in additional, you can add any tips you report on your Form 4137. That's those unreported tips. Now, this flexibility is great, but now the burden is fully on you to prove your numbers. Now, the IRS has given temporary relief on one of the most confusing rules. The law said your tips do not qualify if you work in a specified service, trade, or business. You're like, say, what? Well, if your employer is an SSTB, that would disqualify huge industries like beauty, personal services, consulting, performing arts, fitness, financial services, and many more. But here's a big update. The IRS says they will not enforce the SSTB rule until final regs are issued. What does this mean? Well, it means if your job is on that approved tip occupation list that we covered earlier this year, you're treated as eligible, at least for now, until a new list comes out. And this is a massive relief. It means millions more people will qualify for at least the 2025 tax year. Now, what about you non-employees? Think contractors, self-employed people, gig drivers, delivery apps. You get your own set of rules. If you receive a 1099 NEC, MISC, or K, you can still claim the deduction. But those 1099s won't separate your tips out. You must rely on earnings statements, point of sale reports, daily logs, app-generated temp summaries, receipts, third-party network records. This is going to be a documentation nightmare for some people, especially for you gig workers who just weren't prepared for this. Here we are, and you're just finding out about this for the whole year. That means you've got a lot of work to do if you're going to try to take advantage of this. Now, what does this mean for workers? Well, this new set of rules makes it easier to qualify, at least temporarily. Thanks to the IRS pausing the SSTB rule, way more workers are automatically eligible. It means you now have multiple ways to document your tips, and that gives you flexibility so we can make sure we can maximize that deduction. It means you can rely on the proposed job list, and we don't have to wait for final rules to come out to know whether we can do this. What are the complications? Well, you've heard them. You're now responsible for proving your tip amount. This is going to be a huge pain for some of you. No separate tip reporting on the W-2 means you have to keep immaculate records. And if you're a high earner and box 7 is capped, it may mean you will miss thousands. So if you're over the Social Security wage base, box 7 is not going to reflect all your tips. So in that case, you're probably going to have to rely on your Form 4070s. If your employer misclassifies your occupation, you could lose the deduction. Now, that's mostly for next year when those codes appear. For this year, we're going to be okay because that's not on the W-2s. You gig workers and self-employed people, you must keep every scrap of documentation. Document, document, document. Apps aren't required to separate tips yet, so the burden is going to be on you. You still owe full FICA taxes, and this is still the part people misunderstand. Even with the deduction, you still owe 7.65% FICA on all tips. Now, what does this mean for you employers? Well, one, it means no new W-2 reporting required yet. That's great. We get a grace period for 25. But in 26, you got to be ready. You're going to have to track cash tips separately. We're going to have to track those occupation codes. We're going to have to report both of these on our W-2s. This means we're probably going to need maybe new payroll systems, new point of sale requirements, and new compliant procedures. Employees may need to classify whether they are an SSTB, even though the IRS isn't enforcing it this year. Eventually will. I would expect that to happen next year. You must help your employees understand the tip reporting. This includes providing access to tip reports, daily or shift summaries, payroll system reports, any documentation used to calculate tip amounts. Mistakes on this could affect employee deductions. If the employer misreports, even unintentionally, the worker could lose a deduction worth thousands, and the employer could be facing penalties. So what should you do right now? Step 1, track your tips daily. Let's go ahead and get that habit started. Use a notebook, an app, a spreadsheet. I don't care, but we got to track it daily. Keep monthly Form 4070s. That could really be a big help to you. That may be the only proof of the amount. And since you turned it into your employer, it's going to be very strong. You're going to want to verify your job is on the proposed IRS tipping occupation list. Now, most service jobs are included, but let's verify that. Number 4, ask your employer whether they're going to put the tip info in box 14. Some will start early, but I wouldn't bank on it. I doubt that many will, but take advantage if they do. Number 5, if you're self-employed, save everything. We've been saying that on other things anyway, but save everything. Receipts, point of sale logs, app payouts, everything counts. You got to track it. And step 6, to prepare for 26 changes next year, the reporting gets much stricter and more complicated, so let's get started now. So does this new IRS guidance make the no tax on tips deduction simpler? In some ways, yes. In other ways, absolutely not. Here's the bottom line. 25 is our year to get organized. If you track your tips the right way, you can take full advantage of this deduction and potentially save thousands of dollars in federal income tax. Now, in our next video, we will cover some of what I've found to be the most frequently asked questions, and you're going to want to see this video. We're going to go over the details of what it does and doesn't count. You're going to want to understand this, as it could save you thousands. If you found this helpful, hit the like button. It helps more people see the truth behind these new laws. Drop your questions below and subscribe so you don't miss the next update. You're not going to want to miss it, and I'll see you in the next one.